Good morning everyone, and welcome to the PivotBoss pre-market video for Wednesday, June 10th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that the ES is still trading within a very narrow range that has developed ahead of today's FOMC meeting and statement. We have the Fed interest rate decision that will also be released as well, and that's all going to happen at 1 o'clock p.m. Central, 2 p.m. Eastern later on this afternoon. The market tends to trade in a range ahead of that, but at times can also find some directional conviction, likely to the upside. Once we get that 1 o'clock release, we will get ourselves another FOMC key level. The last one we got here was in April, and what tends to happen is if you get a level here and you see one move, the initial impulse move away from that level, you'll tend to see a snapback to that level at a later time. For example, in this one, the April level was offered. Once you saw rejection, it snapped back right to that level. When it came back and found a lower low, it again snapped right back to that level. And before this major breakout, it coiled up around that level before it rallied here. And so right now, we're going to get ourselves another one of these. We could trade mostly range bound heading into that event, fade new highs and lows with an upward bias right now. But you look right down here. I got the advanced ADR indicator set to 3. You can see this magenta colored bar right there that tells you that it's super compressed. How compressed? It's 42% of average. 42% of average right now. Anything below 65% tends to suggest very compressed price action. That can usually lead to a breakout opportunity. The last couple of times we've seen that happen is right here, and that's represented with these ranges, and then that's the breakout. Then we had another one here, that's this narrow 3-day range, and here's the breakout. And so right now we're seeing another narrow 3-day range. We could see a breakout, and if we do, it will be a move of about 130 points. You see right here, 130, that's the 125% of ADR level, and so that's about where we would go or just beyond it. As you can see, it tends to be the case based off average 10-day range. So right now we could be coiling into that event, and then once a breakout occurs, we could see an easy move of about 130 points over the course of a 1 to 3 day period. Alright, let's take a look now at the NQ. You'll see the NQ as well has been very bullish, holding at highs heading into the FOMC event. This one not really compressing though right now. You can see the 3-day range average is 88% of average, so it's right in line, and today's not even over yet. So again, this market has been very bullish. We've seen a breakout and hold here and a continuation. We have now surpassed the 10K level, reaching it yesterday and holding at that zone. Now we are through it. Again, we are now through these highs, and this is going to be very important to continue to watch here is this high. Basically the 97.50 zone, because again, if price can't stay above that high, what you'll tend to see is a major rejection that could lead us at least part of the way back down, back toward a 200-day. In extreme cases, we could see it flush down this way as well, but at the moment, any pullback into this zone is likely to be defended by bulls first for another continuation higher, and that's the likely scenario here. But if there's at any point it fails to hold this previous high, the 97.63, that will likely suggest some sort of near-term pullback, at least to a prior month's midpoint. For example, that would be about right here, or perhaps even lower into the 200-day average or back to value. So of course right now this market remains extremely bullish, so no signs of rejection. So right now that means you got to continue to look to buy the dips and look to fade every single counter trend move within this primary uptrending market. Alright, let's take a look now at crude oil. Right now crude oil is compressing here, very narrow day on a 1-day basis. It's trading just 38% of average with an 88 tick range today so far heading into RTH. It has been averaging about $2.31 on a 10-day range basis. We're at that point right now where we've just finished another big move. We've hit the 40 target, and now we're gone sideways here for a few days. But the trending market remains intact. Again, as long as this market remains intact and continues to honor the PIMA trigger zone here, everything will continue to push higher. Obviously, we have hit the 40 level, so we've backed off a bit, but even if this were to come down and test as low as, say, 35s, it could still throw off a tail or some sort of rejection, and we could be headed higher into about that 42 upper target. So again, right now, this market remains bullish. A narrow range on a 4-day range basis, perhaps. Let's bump this up to 4. You'll see right here, trading 73, so just about average here on a 4-day range. But for the most part, it is range bound. Does have an upward bias. If we were to take out lows, look for a bear trap for a shot at squeezing this thing higher. Okay, let's take a look now at gold futures. Gold right now trading 1732s, 1728s right now rather. It has bounced very nicely off the 1670 zone. It continues to be range bound. This range has developed over the course of now 10 weeks, and that's significant. That's a significant amount of energy, and again, that's enough energy to spark the next move that is equal to the range that preceded it, that move, that impulse move, which is about 250 points. So again, are we going to see that release of energy to the upside or to the downside? If you're bullish, again, the side to be defending is on this side here. Every time it hits that area, you want to defend for a shot at pushing this thing higher, take profits or take some sort of partial profits ahead of resistance here, and then leave some for a shot at breaking through eventually to the upside. If you're bearish, you would be doing business on the opposite side here for a shot at breaking down. But again, we have key levels on both, or key targets rather, on both sides of the range. 1575 and 1450 on the downside, 1831 and 1957 on the upside. Those would be 2 to 3 month targets, by the way, although it could reach those targets much quicker. Okay, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.